Hello and welcome to a very special episode of Hot Commodities, where we look back at 2013 and give you outlook for 2014 on how your trade should be in all of those commodities. Let's start with crude then, and that one is trading at a 2-month highs today, above $100 a barrel on supply disruption in Africa. And you have seen the jobless claims number from US also come in slightly on the positive side. On your screens, that's Brent crude oil prices holding 1.25% on the higher side for the whole of this year. $112 per barrel is how that one is trading. Take a look at the NYMEX crude oil prices, and the performance there has been much better, nearly 10% up in the international markets coming in for this year. So clearly it's the NYMEX crude oil prices over Brent in sense of performance on the higher side. Let's get in the Indian prices on your screens, and 24% of a whooping gain is what you have seen onto that one, $6,200 per barrel onto that. Let's get in then. Vijay Bhamwani, who's author and CEO at bsplindia.com. Also joining us is Vandana Hari. She's Asia Editorial Director at Platts. And we will now discuss about the crude oil prices. Vijay, to you first. And how do you look at the performance that we have seen in 2013? The best one, of course, coming in from the Indian markets.
Absolutely right, Manisha. And quite a lot of it has to be attributed to the USD INR. And in the year, the rupee has weakened against the dollar, and the landed price of crude has therefore been pushed higher. Now, in 2014, you're likely to see a pull and push on crude oil prices. On one hand, US is pumping out more and more crude oil, and therefore its dependence on overseas fossil fuel imports will go down. On the other hand, you're talking of economic recovery in Europe and America, in which case the demand is likely to expand. So there'll be volatility on both sides, with 6,225 to 6,250 being a critical trend determining level. As long as the bulls manage to keep crude trading above this threshold, I think the day belongs to the buy on dips rather than sell on rallies. So I think as long as crude is above 6,200, I'd like to bet on long sides.
All right, so bullish cues continuing for the crude oil prices. Vandana, what's your sense? What's your outlook for the crude, both Brent and NYMEX for 2014 now?
Brent crude as the global benchmark of crude now is expected to be pretty much range bound through 2014. I would say in the vicinity of $100 to $110 a barrel. NYMEX, or the US light sweet crude benchmark, would probably be a little more volatile because there's a lot of additional pipeline capacity that's has come on stream this year, and some more expected next year to take oil out of the storage hub of Cushing to the refiners in the Gulf Coast. So what we could see next year is a further crunching of the spread between Brent and WTI coming in from about $12 a barrel now and could as much as half to average over 2014. Now, what we've seen this year is that more fundamentals actually influencing oil prices rather than geopolitical factors. There are geopolitical factors, of course, but to a large extent, it seems for now that they have played themselves out. There's about an estimated 1 million barrels per day of oil that could have flowed into the market, but is not flowing because of problems in places like Nigeria, Libya, South Sudan, and so on, which is expected to continue.
Vandana, the big theme that everybody seems to be talking about really is the shale gas output, which is expected to go higher now in 2014. What supply-demand numbers are you working with?
So what we have seen in the U.S. is actually drilling concentrating more on the oil-rich plays, so areas from where you can get NGLs, basically liquids, or light sweet crude. Nonetheless, there continues to be a steady growth in gas supply. Definitely it happened in 2013 and expected to happen in 2014 as well. I have some numbers here with me, which are estimates by Bentech, a company of Platts, which has projected that the U.S. gas supply, now it's difficult to break out shale, but U.S. gas supply, natural gas supply, is expected to be up about 2.3 BCF, billion cubic feet per day, or roughly a 3% rise in 2014 to about 72.2 BCF per day. And going forward until 2018, the U.S. gas supply is expected to continue rising by about 2.5 BCF per day, according to Bentech estimates, until it reaches about 80 BCF per day in 2018.
Vandana, also, could you please categorize under bullish, bearish or neutral for the energy sector going into 2014, quarter-wise, if you may?
Yeah, the overarching theme, as I mentioned before, appears to be a reconnecting with the fundamentals of oil prices. The other major factors or trends that are worth keeping in mind is increase in U.S. tight oil production. So the U.S. is expected to add nearly 1 million barrels per day of production from its shale plays in 2014. There's also growth expected from countries like Iran and Iraq. Now, OPEC at its meeting earlier in December pledged to keep its output, combined output at 30 million barrels per day. But interestingly, Iran and Iraq both vowed to boost their output. Now, there's factors that might hold both the countries back. We have seen in recent weeks a lot of violence in the southern part of Iraq, which is an oil-producing region. Iran remains under international sanctions. Now, that might get lifted if there's a comprehensive agreement that does get forged towards the middle of next year. So overall, we see there's ample supply. Demand is expected to go up as well, but largely a balanced picture. I think there are a few unknowns and that could surprise the markets, especially if the production that has been curtailed in places like Nigeria, Sudan and Libya does come back to the market. I feel it will be quite challenging for OPEC to try and rein in production. But at any rate, I think the cartel will move to do something if to try and support prices at $100 a barrel. It wouldn't want the prices to slip below that for any sustained period of time.
Well, thank you, Vandana. That's about the crude oil prices, but also to natural gas, where the prices have seen very strong gains, more than 40% up in Indian markets itself. What's your view on the demand-supply scenario going forward?
Natural gas has been a very interesting area of the energy scene to watch, especially because of the boom in production in the U.S. In the U.S. itself, we have seen natural gas prices depressed quite a bit as a result of the increasing production. But interestingly, at the same time, we've also seen natural gas displace a lot of oil consumption in the U.S. and quite prominently in the power generation sector, for instance. As a result, some of the trends that have been with us in 2013 and likely to continue in 2014 is as more coal gets freed up in the U.S. because it's being displaced by gas, a lot of this coal coming out into being exported into Europe as well as in Asia. Nonetheless, Asia's reliance on gas imports remains pretty high as well. And we've seen, for instance, in recent days, the average for spot LNG prices, the Japan-Korea marker of Platts averaged $19 per MMBTU, pretty high prices, which were basically because the Chinese came into the market pretty aggressively to buy. Now, this is for North Asia, this is a high demand season for gas. Winter heating demand kicks in, and the Chinese, because of drop in domestic gas production, had to resort to more LNG imports. Nonetheless, we saw $19 a barrel kind of being a resistance level, so prices have come back a little bit since then.
All right, so that's the view really coming in for the energy sector. Thank you so much, Vandana, for joining us and giving us your sense. So another year that could see some more steady gains coming in for that. But with that, let's take a look at the gold prices now, and that hasn't seen much of gains coming in, and you have seen 27%, 28% of a decline coming in for the gold prices. This is the worst year in last 3 decades that you have seen gold performance coming in as. Take a look at the Indian prices, because the decline there has not been so sharp because of the rupee depreciation, so just about 8% of a fall coming in into these markets. Vijay, how would you first of all look at the price divergence, and what's your view now coming in for 2014?
Manisha, I've been advocating staying away from gold from November 2012. And I don't see any reason why one should be buying gold at this point in time. There's regulatory intervention. There's clearly the higher import duties as well as curbs on gold imports. You're also seeing gaining of traction of the economic recovery, which means safe haven buying is likely to be curtailed. And since risk appetite is likely to go up in financial assets, my guess is gold might remain an underperformer even in 2014. Coming back to the Indian context, where price levels are concerned, I think 26,000 on the MCX, give or take 300-400 rupees here and there. So 26,000 to 26,500 on the downside seems a possible scenario during the year, with rallies being capped to the 30,000 odd levels. So give and take a leeway of 2,000 from the present levels, 2,000 on the downside, and in a very optimistic exuberant scenario, 2,000 on the upside is what I would see gold at. But very clearly the wind is out of the sails of the gold bulls.
Okay, so no buying opportunity or recommendation coming in for the precious metal space. Let's take a look at the agro-commodity space then, and we have seen choppiness continue there as well. Potato has been something that has been running quite strong, Vijay, and do you see 2014 starting on a big note as well?
I think yes, Manisha. Potato is likely to outperform the broader markets in the agri space, and I've talked about the 4-digit mark, which is now just a whisker away from fructifying. I'm actually more interested in the second month futures, which is the April month, with March being the current month future here. April is quoting at roughly 15 rupee discount to March, and here I would expect the prices to push well past the 1,000 rupee mark in the April future series, with the possibility of 1,040 being a distinct probability. So I would seek buy opportunities on potatoes at least till February or March of 2014. Cyclically also, this is a period when demand expansion is seen as significant, and the 930 to 950 mark is where I would see a floor for potatoes. 1,040 being the primary target. I would not rule out a level well past the 1,040 also.
The other one really has been the edible oil sector, and most of the other people are call it bullish. Are you in the same camp, and would you go buy there?
I'm not all that gung-ho in edible oils, Manisha. I think in the absolute near term, at least up to the first calendar quarter of 2014, I expect CPO and soya oil to go down. The only joker in the pack could be a sudden spike in crude oil. I'm talking of fuel crude. If that starts to spike up, then biodiesel becomes a viable alternative, which would push both CPO and soya oil prices higher. Barring that, I think the rupee is stable, and it has a fighting chance of strengthening a little bit, which would exert pressure, downward pressure on imported edible oil. And therefore, at least for the first calendar quarter, I would not want to buy CPO or soybean oil.